Welcome to the fifth episode of Vaultside. I am Reno Kutsia with Citizens for Sound Money. We are hosting this episode with Kinesis, and just a little bit about the questions. The questions were all selected from the community and then evaluated and sorted through. Just a little bit about C4SM. We exist to promote the use of sound money and protect people's rights to do so. Please go find us through our websites, which find Citizens for Sound Money or soundmoneymovement.org, which is our new 501c3, an educational entity. And then also find ways to become a member of C4SM. We have a Pioneer membership that is also on our website. And so just would like to welcome Tom and the Kinesis team to this episode. Tom, take it away.
Yeah, thanks, Reno. Thanks, Daniel. Thanks, John. Thanks, everyone. Missed you, for connecting in. I know it's been a little while. We missed the last one. Everyone was flat strat and getting projects and deliveries live, but we also wanted to, wait until we were able to talk in more depth with regards to some of these projects, start sort of pulling back the veil on strategy and the like. And, I think we've got the curtain just a little bit open where people can start to sort of, peek through and see what's going on. And it's at a point now where we can start talking about things more, because there's obviously a lot of NDAs in place. There's a lot of confidentiality and commercially sensitive things in place as well. So looking forward to just bringing a bit of perspective on everything. I completely understand that, we've got a lot of investors out there that have had to really, exert a lot of patience throughout this process, and the same applies with us. And I want everyone to know that we're here fighting in your corner. Obviously, our battle is such that it's that failure is not an option. So we just continue to, fight from the trenches for everybody. And I want to get into things and start to open up with the team on where we're going and what we're doing. And, we've let everyone know from a higher level, but providing further perspective. So before I go on, let me introduce who we've got on the call today from the Kinesis side. We've got Eric Maine, our President and Chief Strategy Officer, Andy Maguire, Director, and obviously, superstar on the Live from the Vault program. Jai Bifulco, our Chief Commercial Officer, and Jason Norman, our Chief Technology Officer.
All right, Tom, thanks for that. Are there any particular staff updates you'd like to make for us this evening?
Yeah, sure. Thanks, Reno. So, we're constantly hiring, of course, in different teams across the world, and our plans going into 2025 are for, a larger expansion of our global teams. Of course, of great importance is one of our largest markets, which is the United States market. We've brought online someone near and dear to you guys, actually, as well, and I understand that he'll be maintaining his position within Citizens for Sound Money. But that's Rob Kientz, and he'll be spearheading our US operations, both on the physical side, well, actually initially largely centered on the physical side, but also, playing a role on the media side. And, we're positioning what he'll be doing there on the media side. Obviously, our shows are building out. We've got Live from the Vault. We've got Talking Trades. And, Rob has his superpowers in certain areas as well. I think he's a great orator and an educator as well. So it'll be good to sort of, join forces with him on the educational media side. But we've got some pretty major plans to expand our physical operations in the States, and for Rob to help build out our footprint and just presence to better serve our community within the United States. So That's a major addition of noteworthiness, I would say. We've been building out teams. Like there's teams that Jai's been building out on his side, and the partner team and the client success team, and testing and analyzing all the data as it comes in, and proving things up to then be able to expand further. And that's a quick comment on the team expansion and noteworthy additions.
Well, I'm glad to see that Rob's on the team. He's a phenomenal asset in multiple ways. So I'm glad that he's on the Kinesis team with you guys, and he's also one of our board members, newest board members. So looking forward to see what comes out of Kinesis USA with Rob at the helm. So, all right. Well, I guess I'm the one to ask the next question right now.
Your name's by it.
All right. So we have multiple questions, and these questions were selected from looking at the forum Kinesis .money website, questions from C4SM, and more interesting popular questions that were selected, and then some other questions were delayed later on so that the experts can ask it. So the first question that we wanted to ask is, are there any updates on government or corporate partnerships in the different regions that you're able to share?
Sort of, yes. So, we've been talking about this second government partnership for a very long time now. It was supposed to come online quite fast, but as you guys know, politics is a little bit tricky, and you can get, intentions is one thing, and, reality is another thing, and timeframes do get thrown around. But the latest updates that we're receiving is that it really, truly is close. Like it comes down to different meetings that they set, and we were hoping to get a resolution on the last meeting. We were on the agenda for the last meeting. I think they, were 20 odd points. They got to point number 5, and we were point 12 or something along those lines. Eric has the exact figures on that. So we should get covered like in the next meeting, and we should get resolution on that. So that's for, another government play. We've obviously been working with, you might have seen some updates with regards to the Development Bank of Resilient Prosperity, which is sort of, come from work that we've been doing with the small island developing states. And but that's not just a small island developing state project. It's a global project, and there's some really exciting things at play there. Some really big institutions and also innovative creativity on like monetizing assets, but not necessarily like natural assets, but not necessarily title of ownership of natural assets, but different instruments in order to preserve natural assets, and actually not just natural assets, preserve assets which we want to be within our future reality. So there's some real innovative sort of, creative instruments and structures that are going into that we have a front row seat in. In fact, we're one of the founding partners in building all this out and playing a really big role in the architecture of it. So there's that as well. And, if you look into SIDS, and SIDS is sort of part of also AOSIS, Association of Small Island States. So there's that, and it goes beyond that as well. So yeah, there's that, and we've also, there's another, couple of governments there that we're at early stages with, and I feel like it's going to certainly expand with our new products and facilities coming online. Like we've got one product in the real world asset space, which is just perfectly designed for governments, so they get like extreme value out of it. It's a complete no-brainer. In fact, actually, the whole impetus of the product development was to actually provide value at the sort of national government level. So there's that. So Yeah, that's what I have to say. Eric, I don't know whether you want to add anything there at all.
Yeah, Tom, thanks. Yeah, I can give a little update on the country that's very close. I was hoping to have some news this evening because actually this is coming through the central bank of the country. That is who we are partnering with. And as we're recording this, the board of governors of the central bank is having their meeting that will codify our agreement with them. So that is very close through the central bank, and we'll be white labeling the Kinesis platform for them, and will be an alternative currency for the country using the digital gold and silver.
Awesome. Yeah. All right, Eric. So the next question is going to be on Indonesia, and there's like 3 bullet points. We've had a lot of questions on possible metrics. So I'm just going to ask a general question, and if you can try to address all 3 of those, then we don't have to do sub questions. All right, thanks for that, Eric. Next, we'd like to ask about Indonesia. Can you give us an update? We see a lot of 0.01s and 0.04s running through the screens in the exchange, and we're assuming that is Indonesia.
It is, and thanks for that, Rhino. So there's been, we're not exactly where we want to be with Indonesia. Obviously, it's a step-by-step growth process. It's just some metrics. There's over 10,000 accounts that are associated with us. The first year, we're going to call it 2023, which is kind of pre-commercialization. There were 172,000 transactions. And this year, not including December, we're at over 1.6 million transactions. So it's about a tenfold increase. And so that's good news. It's not where it needs to be. They're very relatively small transactions, as you've just alluded to. But the trajectory is there. And I know part of the questions is around NU and the recent launch of that and how that might affect everything. So NU obviously was the potential game changer in all of this. You have the government post office. The government entity can be quite slow sometimes. We have the Jakarta Futures Exchange, which is a futures exchange and not acclimated to spot trading as much, but they're learning and they're getting members behind it all. But NU is the piece that has the potential to be really big, and the upper echelon of the NU executive committees are firmly behind it. They love the gold to Mecca aspect, where it's on average over 2 million Indonesians go to Mecca each year, or the Hajj, and they are actively going to, the NU executive committees are actually going to help facilitate that through this app. And the vice president of Indonesia, the new vice president, is also a big NU guy. So we've had discussions with him indirectly through our partners in Indonesia, and he's firmly behind it as well. So we have a lot of hope for NU, and we think that will be kind of the impetus that gets everything else moving, on a much quicker pace as well.
All right.
On a third point, there's been some recent discussions from out of the regulator BPT about how the gold transaction industry in Indonesia has developed. And there's been some numbers thrown out that last year there was 8 trillion, this year there's been 8 trillion IDR of gold transactions. That is not attributed to digital physical gold. That is for the industry as a whole, all imports, exports, all trading that happens from a government level on the physical side, from the central bank and from mining companies, etc. That's a whole big number that's industry wide. It's not about what we do. And the other piece was around there's a few companies that were mentioned in a recent article, digital physical gold traders. A couple of them are clients of ours through we store gold for them. But the important distinction is all of those companies that were listed are off-exchange trading companies. So they are, in the most cases, not allowed to face clients. They're trading for their own accounts. They have the ability to bring in funds, but not like a broker type situation. So we're the only group through our partners that is on exchange digital physical gold, meaning that we go through the Jakarta Futures Exchange, the government clearinghouse, and so that has a structure that has much more potential for growth because you have all of the members of the exchange and then all the downstream clients from there. So it has a much bigger potential.
Yeah. So we've got we've had the Kinesis Bailee Company, and that really highlights the strength of the Bailee arrangement. Could you comment on what the latest is on that? And it seems like, in the same way that we've learned a little bit about USD1 today, that that is going to be able to be positioned against institutionals, that the Bailee arrangement via the Kinesis Bailee Company would do the same for KAU and KAG.
Yeah, I can comment just quickly on that. So yes, we were hoping to have Bailee by the last audit. We obviously didn't have Bailee by the last audit. I guess the Bailee project doesn't operate in an island. So what actually happened was when we went to CIMA, so the Cayman Island Monetary Authority, and actually put in our application to change the tokenomics of the KVT, so to build the new KVT, basically putting it on Stellar, making it divisible. That triggered effectively an audit, a comprehensive audit of Kinesis by the regulator, initially starting with what they called a desk audit, where we had to furnish all basically all of our internal policies, procedures, AML, financial audit, effectively everything. Extremely comprehensive audit. And just, I guess they're doing their job in order to, make sure that consumers are protected. So, and make sure, we're not engaging in any nefarious activity in any way. And perhaps, like the application to, it did. The application to actually change the tokenomics of the KVT triggered that audit. Now, before, and I apologize to the community, I actually didn't realize that, firstly, with the new KVT, that basically laws of materiality were triggered by creating a new token, and that needed to go through the regulatory process with CIMA, but it did. Our legal team obviously jumped on that, and it went through the process there. Now it's the same story with Kinesis Bailee Company. You go change the safekeeper of the actual metal, and that's actually that's a material thing. So I'm pleased to announce that we have approval, literally within the last week, for the new KVT to go live. And there's preconditions there. We've got to follow different steps as far as notification and to the community, and but there's that, and I know that the new KVT is another point altogether, but it's all combined, right? Because Bailee's been held up by CIMA. But also, yes, we've been green lighted also for Kinesis Bailee Company. So that is really positive news. So by the next audit, you will see Kinesis Bailee Company. It is tied. Let me just say this: it's tied into. We're in an interim period of a bit of a restructure. I can't say too much right now, but there is, there's a bit of a restructure going on. It's been envisaged for a long time. We've been making manoeuvres for a long time as far as a restructure, and obviously Kinesis Bailee Company is an Australian company. You'll see some of these new companies form in Australia, and that gives a little bit of an idea on manoeuvrings there. Kinesis Cayman is a Cayman Island entity is a difficult entity to bank. Let me just put it that way. And Australia is, it's a Western Alliance country. It's a Commonwealth country. It's a robust jurisdiction. So we are looking strongly at Australia at this point, and we've got strategic plans in Australia. So that's I think answers the question there as far as Kinesis Bailee. Yeah.
All right. Next up is a question for Jai on the partner program. We've seen some interesting influencers mention Kinesis online, and so we'd like to hear how the partner program is going, and where do you see that in the next 6 months?
Yeah, thank you. So partner programs is a good one. 2024 marked the launch of the partner program, and a lot of technical development went into the partner program. It's been fully operational for some time now. We've had hundreds of applications. So we've got, a small but very effective team running partner program. And to date, we have over 20 active partners that fulfill the requirements of the program. The very minimum requirements are we're looking for partners to do 3 to 30 and beyond million in a month in volume. So we've got 20 qualified partners in the program right now that have the potential to fulfill those minimum requirements, which is great news. We don't need thousands of partners. We just need, a good solid group of really active volume producing clients. As the pro launch has just come on, a lot of partners are going to be activated in 2025. We've got many, many partners lined up around this release and everything that's happening at the moment. So it's going really well, and we've seen an incredibly diverse array of partners from, IRA folk in the US to financial clients to key opinion leaders, which are like influencers in the space within Web3 and crypto and precious metals, and everybody really loving Kinesis and really seeing the opportunity. We've had some interesting public type of partners which have moved significant sums of money and done millions in trades so far, and have come across from what I would call legacy precious metals providers. Legacy precious metals providers, we all know their names, I don't need to mention them, but a lot of the people that are coming through to Kinesis Partner Program now in the precious metal space are seeing a huge opportunity to make something work in the precious metal space. It's never been available before. You can interact with precious metals in a new way, and they can create, new revenue streams for their business and actually get out there and provide value to their clients using the Kinesis ecosystem. So we're seeing a lot of that. We have a lot of plans for 2025, including a really, really big push with KOLs. So a lot of key opinion leaders, major ones, are starting to come on board to the partner program, all geared up. We've got a very, very good revenue model for them. And we have developed a whole marketing suite within the partner program now that allows all these people to get instant access to a lot of the marketing programs that we're going to be running. And I know another question you've got down the line here is, what will we be doing in 2025 in the way of marketing? And I can touch on that a little bit later on, but the point is that the partners are connected via the partner program conduit to all of our marketing efforts, and have one-on-one support from the partner team to understand how that can work with their communities in an individual way. So they're all handheld and they're all walked through, and they've all got all their marketing material that can work with their audiences, so they can tap into all the banners, the landing pages, the videos, the creatives, the competitions, whatever it is we're going to be running next year. So that's the current state of play, and it's apart from all of those things that I've mentioned, in 2025 we're going to be expanding the internal team. Now we've got good systems and flow, and we've got a good way to run the program, because it is a lot of hands-on. Partners require a lot of attention. We can now expand the team, train more members to come into the partner program, recruit some really good talent in all the various industries that we can touch, and expand from there. We also launched the introducing partner portion of the partner program, which is now embedded into the yield pool and into the automated mechanics of the system. And the introducing partner is really exciting, because it means that people that may be connected, may not be connected. They might not have 20, 30, 40, 50, 60,000 people they've got access to, but they might think, oh, okay, I'm really close with a friend of the family who runs an accountancy who's got hundreds of clients that could benefit, or I'm connected to a company here that is doing international commerce and that could benefit. They're able to come and recruit people into the partner program and benefit from their introducing partners network. So that's all been built in as well. So it's all-inclusive program at this point. And that's the state of play as of Christmas. So really looking to 2025, I think it's going to get supercharged. So, yeah.
That sounds fantastic, Jai. This next question is for Eric, and it relates to the partnership with PT-Pegadaian, the government-owned gold pawning and trading company. And it's been asked, as that is an example of physical digital networks or stores, looking for a comment on that partnership. And then also, do you foresee similar pawning type networks in other countries or regions being employed in this way?
Okay, first an update on Pegadaian. So, as you know, yes, we have a partnership with them, and this actually folds into a little bigger conversation about recent communication about Indonesia wanting to set up a government bullion bank. And Pegadaian and Kinesis have started conversations with the relevant parties that are going to be running that bullion bank about storing it jointly between Pegadaian and KMI, Kinesis Monetary Indonesia, about the bullion bank utilizing Kinesis as the footprint for the pricing that they can utilize buying gold from us through our apps there for the bank. But that's quite a ways off. They say 2025, but it's probably going to slip further than that, the bullion bank, that is, in that they don't really have a market system. They'll probably piggyback with us to begin with, but ultimately they'll want to have their own. And maybe we can, we're starting initial discussions on whether we can, like we do with other governments, partner with the central bank on some kind of facilitation of a platform for them to utilize that incorporates us. As far as other regions, yeah, I mean, it's not easy, right? Because you have competitive interests that are at play in trying to foster those type of relationships. But it's one of the conversations where every time we talk to other governments, that is part of the play deck, that we can enhance the current, whatever the current situation is within the country on their physical trading versus online trading, and we fit squarely between both those worlds, and we can help enhance them to do that. I don't have any specific updates to say, okay, well, we're close with this or with that, but it is part of the play deck, with every government we deal with. And, generally, as we move step by step through these government negotiations, as they get closer, that's part of the conversation. And they're generally interested in that because it floats all boats. And it doesn't really become a competitive situation. It becomes a win-win for everybody. So that's what I'd say about that.
I actually smiled when I saw this question because it's perfect for me. The question goes, how do you foresee the changing administration in the U.S. impacting the business climate for Kinesis and the industry in general? And the second part to that is, how do you plan on entering the U.S. in a more meaningful way with the new administration?
Oh, that's a big question. That's a big question. Hey, look, if I had my US partner, our US partner on here, he'd chew your ear off for about the next 4 hours on this. But look, I think it's a very positive thing, of course. Trump, they call him, a transactional president. He obviously is putting America first. He wants to foster commerce and economic activity within the United States, and also innovation and creativity. So, the innovation and the creativity out of the commercial side, it's coming from technology. Whether we look at AI or, blockchain, crypto technology, that's where it's coming from. It's very clear to me that the Trump administration, they're across it, they understand it, and if they try to do what the Biden administration had been doing, then really they just sort of push it away to other parts of the world. And so, I am very positive about it. We've got things going on right now. Like, for example, our major US partner is in Washington today. I know that I have to be careful what I say, actually, but there's been visits and liaison with influential parties within the administration, and they know about us. Let's just put it that way. They know about us, and so we're working there diligently. It's a base that is well covered. Let me just put it that way. It's a base that's well covered. And with USD1 going live as well, and I'm sure we'll get into USD1 because I got a lot to say about that one. But it's firstly, I like the branding. One, it transcends corporate branding. It's no, USDT like standing for tether, or it's no USDC standing for circle. It's USD1. And we've got our stablecoin suite that will be rolling out with that's all based around one, right? And the numeral one transcends corporate branding, in my view.
Yeah, I can't wait to dig into that a little later in the Vaultside chat, because we got a lot of questions, and I know the people who are watching right now are chomping at the bit to hear a little bit more about USD1 and Pro. So.
Fantastic. Thanks for that. So one of the things we frequently hear on the forum and in other groups has to do with social media presence, marketing, like aggressively going after a strategy. I mean, and so now that I believe it's always been said that we're waiting for commercialization, and then there will be a marketing push. Can you guys kind of tell us how you see 2025 playing out from a marketing strategy and a brand awareness standpoint?
I know for a number of years now, the community's been, listening to me yap away about target market verticals and these kind of things. And we've been building out to provide value to those different target market verticals. So, the primary ones are in the precious metal space. We've sort of got that one covered. We've always provided value to the precious metal space. with the monetary system and the yields and this and that. But we obviously want to expand to like the crypto space as well. There's a lot of energy and vibrancy in the crypto markets at the moment, particularly with the Trump administration coming in now. Also to the general investments space and payment and banking space as well. So going into 2025, the crypto sphere, the payment and banking sphere are going to be like really big for us, because we've got focused on our horizon, the commercialization of Kinesis Pro, and that's going to keep on, what they see today is actually just bare bones, minimal viable product to get it live, give everyone a little Christmas gift, get it live, but it's going to really build out. We'll delve into that further later, but also Kinesis Pay. And when I say Kinesis Pay, it's not really just, the payment facilities. It really encompasses what we previously spoke about as being the Kinesis Commercial Center in the ecosystem. So this is building out all the merchants that Kinesis Pay is integrated into. Like Metalback is the first sort of, little display of that. And it will be expanding from that to include, Kinesis Pay merchants as well. And they can run different specials and programs and all that kind of thing through our platform. So, we'll be creating a mecca for economic commerce within our system. So as we bring online these products and facilities, then that means that we can actually start putting budget into commercializing them. Now, some might say, oh, well, you should have been out, stomping your feet and jumping up and down and screaming about Kinesis everywhere. Yeah, but what happens is we go spend a lot of money and we might bring people into the system, but then we lose them. So, the definition of insanity is, doing the same thing over and over and expecting a different result. No, it's just that would be very imprudent executive action on our part to be throwing money at something to only then lose it. What it means is in all the metrics, and, we've pumped millions of dollars into building out our back-end systems where we analyze all the data. And, it calculates cost per acquisition of customer in different regions all around the world. And you can see it. It's a very scientific thing. There's a creative side to, obviously, marketing, but also there's a heavy, scientific, quantitative side to marketing as well. So, a big part of what Jai does, and this is what I call, tactical management, is delving into the numbers, delving into the data, and evolving the back-end systems to do that. Now, we've, got millions and millions of billions of points of data from where we are now. So we can, we can target things in a very directed way and tactical way to get to the people that we want to get to. But I'll hand over to Jai. But of course, you're going to see a scaling up as these different projects come to fruition. There's Pro, there's USD1, the stablecoin suite, there's Kinesis Pay, and also there's the debit card, which we were hoping to get to you guys this quarter. We jammed into a freeze on an upstream provider just coming into Christmas that we can dig into in a little bit. But handing over to you, Jai, to talk about this.
Yeah, I mean, look, I think it's said perfectly, and there's not really much more I can add to that, other than the fact that what I will say is that this tactical management that's been going on has yielded a lot of intellectual data and proprietary data that we can go out to market with, and now we start to couple the strategy alongside that in the new year. But while all of this building out, this mecca has been building out, we've been extremely hard at work. So everything that will happen, we've been gearing towards this whole year. So there is a hell of a lot of creative and strategy that's been developed, ready to go out of the box, and waiting for these things to come online. So we haven't been sitting on our hands in the meantime. So yeah, I think Tom said it perfectly, and I think in 2025 you're going to see a lot of that spring-loaded action take place, and we'll have that delivery, that ecosystem for people to come into that's really going to keep them sticky. We want people to come in, we need to retain them, and we want them to have a great experience, and that's really what our focus has been on. So that's all I really need to say on that, I guess. Yeah.
All right. Well, I'm going to take the next question. And this is exciting because I know a lot of KVT investors are curious on the status of KVT. In the last quarterly update, it was indicated that the regulator has been successfully engaged for KVT migration. What is the current status, and when do you expect KVT to become tradable? And could you comment on the enhanced tokenomics referred to in that update?
Yep. Yeah, thanks, Dan. So, look, I think it's only fair, like it is only fair to our community to come out and actually deliver on, some of these very positive projects that we've been working on, because they're quite large in scale, I have to say. Like, we've been working on for a long time, and you might be starting to get a taste of the quantum as far as, the USD1 going live, and there's more behind the scenes, right? You guys are just getting a little surface level view. So there's big things happening behind the scenes. It is incumbent upon us that we actually release these things. So I think it's only fair that people can make a fair investment decision in offloading, if they wish to offload KVTs. We'll be a buyer in the market, right? So we'll be buying in the market to support liquidity. Now, but there's that side of it, but also it seems to have cohesively been synchronized with the regulator approval. So in Q1, we'll just sync it up. We've got this stablecoin project, which is linked to what we call our hybrid accounts project, which I'll delve into. Pro's going. The virtual debit card is about to go. It will go in Q1, assuming our upstream, suppliers actually supplies what they're contracted to supply, right? Which we thought they were supplying it in December, but they didn't supply it in December. Indications are that it will come in January. Everything's built on our side. We're just waiting for the upstream suppliers to supply, which gets me into, obviously, frustrations around the whole development. We burn so much time on these integrations, and, that goes to the vertical integration strategy, which we can delve into as well. So, yeah, the new KVT is coming in Q1. And, I hope that there will be some serious tailwinds for investors there, looking to re-energize the whole community with these releases. And I think, it'll be coming off some tailwinds. So the idea is to look after our KVT investors, and we'll be providing liquidity in the market as well.
Awesome. Thanks for that, Tom. There are a lot of excited people who would love the freedom there to buy and sell and trade. It's the very basis of a free economy, so it's exciting to finally get there. I am going to combine a question about Kinesis Pro and USD1, and so this is going to sort of open up the topic of that launch today, and maybe you can start with just a bit of context for the iterations of Pro over the last couple of years, how you finally decided where we're at now, and then once you're done with that, maybe roll into USD1, what it means, what all these different terms are that people are reading about in releases. So take it away.
Okay, sure. Yeah. So let me peel back the layers of the onion here. It goes back a couple of years. Effectively, okay. So we've been building out, obviously, the KMS since day one. And behind the scenes of the KMS is a market maker and market making technology. The KMS has been an evolutionary thing. It's at different points in our journey, it's had certain limitations as far as its scalability, And, I guess we still got limitations with regards to our scalability, but those limitations are at a completely different level that it was not even, able to be seen from where we were previously. So going back a couple of years ago, when we actually decided to embark on the pro journey, the KMS was nowhere near where like other, say, crypto trading exchanges were. And in addition to that, our market maker was extremely slow as far as building out new pairs. So I'll give you an honest understanding of like how long it would take for our market making technology provider to build out one pair. One pair was 1 week and thousands of dollars in cost to us just to build out one pair. Now that we've built our own market maker behind the scenes, like this is development that no one sees. It's just literally a couple of minutes. Like it's an admin function. So that is the difference there, because as we add new products, as we add new pairs, it's got this, basically follow on domino effect of everything that we need to build out on the infrastructure side to support it. And one of those components is on the market making side. So initially in the pro journey, we were looking to white label an exchange which was Hong Kongese based. Literally, we were about to release Pro. I think we were like within the week of releasing Pro, and then came news from the Chinese regulator that they were shutting down crypto exchanges. And we literally just got notification from the Hong Kongese-based exchange. Like it was all branded Kinesis and stuff like that. So it was just like a white label, but completely separate platform that they're shutting down, and which is, a shame to us. We'd invested a fair bit in that, and then interlinking like into the KMS. So it was a nice user experience for our users. They shut that down.
Did you say when that was, the time frame?
It was a couple of years ago now. Does anyone, Jai, or does anyone remember the exact time? All right. But after that happened, it led us to exploring other technology in the space, and we landed on a firm which, we can't disclose at this. Well, we probably can, but we won't. It's just not fair game. That develop technology for different crypto exchanges out there. And, some of the crypto exchanges are reasonable size. So we decided to basically contract with them to build out the Pro platform because, we had our own limitations from a technology standpoint. Now, we began integration. There's there's a lot of forms of integration. There's integrations of the yields. There's integration of the wallet systems and of the user interface and making that a good user experience. And to be honest, despite the ups and downs, we actually got there and built it all. There were hold-ups with integration of market makers because they had their way of introducing liquidity into their platform, which wasn't an acceptable risk for us. And I'll explain why. They had this, it's like a liquidity aggregation system that would stream through orders from other exchanges and other market makers, right, into that platform. It was something completely atypical for them to actually integrate directly to like sophisticated market making technology. They just wanted to stream through orders from other exchanges. The thing is, to get the liquidity from the other exchanges, you had to actually put digital assets on those other exchanges, right? So either it's our assets and it's one for one, there's no leverage or anything like that. Either it's our assets on those other exchanges or it's like client assets on other exchanges. And we're not willing to put client assets on other exchanges. And this was a very hot topic, like particularly during, like FTX and everything like that. We've always refused to do it. And, it's translated into a slower journey for us, but it's a safer journey and more secure journey for our users. Like we can't be, continually conducting DD on other exchanges and everything like that, right? So we said, no, we're not utilizing your liquidity technology. You're going to have to interface with our market making tech, which, is the third party's market making tech. And that was a long process. They wouldn't basically the communication between the platforms didn't go well. They wouldn't put through orders in the way that our market maker puts through orders, right? Which is actually Yuchiki on the call. He's seen the evolution actually over the years of the market making tech. Before, it would place a limit order into the exchange, and then it would cancel the limit order when the price moved and placed another order. So, and initially with the KMS, you had the delays. Like when the market's moving around, basically it gets bombarded with all these orders. Basically, limit placement order, then cancel order, then, next placement order, then cancel order. You'd remember that, Yuchiki. We had many conversations back in the day. And we changed that. Well, Jason changed it to be like an amended order type model where it's the order is not coming in and out, but really the price is just being amended, right? So it's a lot less messages going to the servers, and getting jammed up. So there was that. This third-party tech platform, it took a long time to get them to be able to accept that. And even then, it was shaky. So we'd built out everything. Everything was built out for the last year or something like that. And, we were testing it. It was a bit shaky. And another big thing behind the scenes that we did over the last while this year was we basically completely rebuilt the back-end database and exchange engine and re-architected it and implemented that. And so our technology then surpassed the third party's technology. And it actually wasn't that long ago, but we had like basically a D-Day decision. Well, we've got this siloed tech. Yeah, we've done like the best job that we can to interface the user experience, that was the other big integration is integration of the user accounts. So, everyone gets a pro interface account and it's all linked up to our back-end systems, our client management systems. And we can, introduce that. It's a bit clunky. Like someone has to actually send their digital currency to this new platform to trade, and it's got its own wallet system and everything like that. The wallet system is still integrated with Fireblocks that we use as our institutional sort of wallet system to power everything. But eventually we're just like, well, we can actually keep the user experience much more streamlined and I think a much better experience, and we can scale it a lot easier and better by just utilizing our own tech. And so the technology team presented this alternate pathway to us, and we as a team decided to go down that path of basically building it out internally. Now, the real grunt work is in the back-end systems, in the database, in the exchange engine systems, to be able to scale in the way that we need to scale, to be able to add, hundreds of new pairs and, even hundreds of new products. The KMS can support it now, whereas before it couldn't. It would be under massive strain, and be able to support, hundreds of thousands or millions of concurrent users. So that's where the real grunt work's gone in. We've pushed obviously, Kinesis Pro has gone live today. It's got a user interface. It's minimal viable product, I will say. You're going to see that really evolve and look really nice. There's new functionality in there as well that will come online. So, but we just wanted to give the community a Christmas present, and something to chew on and play around with these different pairs. And there's some new order types in there. We've got a pipeline of all new order types. These order, sophisticated order types like trailing stop loss and stuff like that. They were in the other platform. The other platform's still sitting there, it's just not whitelisted. But they're in the new platform. But our platform's going to be so much better. It keeps it within the KMS. It is so much better, and it allows us to evolve much faster. We've got the market making technology where we can actually bring on products really fast now. That's existing established products that are out in the market, but also new products that perhaps we're a partner in actually launching. Might be we're an incubation accelerator partner and going to initial exchange offering for different projects out there to support them and their expansion plans. So that's like the iterative evolution of where we come from and where we landed. I know it's in hindsight, we wish we could just build it all out internally, but back when we were making decisions, that was not even an option for us. It became an option later. And that's how we end up where we landed, and we landed in the right place. That's one thing I will say, that we did land in the right place, and it's 100% owned and operated Kinesis technology. And actually, it's very encouraging seeing the technology that is powering other exchanges at play, and then seeing our technology beating the pants off this other tech. I got to say that is very encouraging there. So, yeah, that's sort of it from my sort of side, from journey on with the actual Pro platform on where we came from, where we are. As if you want me to cover off on the stable coins, that's sort of taking the conversation further. Yeah.
What can you share about other tokens being developed through the Kinesis ecosystem? And what can you share about USD1 and some of the things that we read in the white paper with the surety bond? And what does that mean exactly? And is that going to protect all assets or just USD1? I think a lot of people are interested, especially in some of the chats that we're in.
Yeah. So you're touching on some very special topics, I would say, that we've been working on now for 18 months. I think I looked at the dates. It's about 18 months. We've gone live with USD1. You'll see there's in excess of $15 billion backing USD1. We've minted $12 billion of USD1. It's just a soft launch at this point, okay? It was an important part of Pro as a base currency. So you'll see the new pairs, they're actually, paired with USD1. We left the existing pairs just against USD, and I'll bring context to that shortly. It flows into our hybrid accounts where the stablecoins will actually be, they'll be the currencies within the system. But it's not just that they're hybrid accounts. They're both, fiat in the banking rails, but also in the blockchain rails as well. So that's what the Currency One suite does. Now, the insurance side, so all risk surety insurance wrapping, if you call it that, which has the DNA of what is called an all risk surety bond. That is something that we've been working with an underwriter now for the better part of 18 months. And it's going to be the first product that will be introduced into the space. It's a pretty big deal in my view, because what it does basically is cover the value. Firstly, as it's applied against the product, it covers the value of the product, that it is what it's supposed to be, which is pegged to the US dollar. So basically the asset reserve, that backs the actual digital currency, is 100% backed. Now, in our case, we overcapitalize. So, we've got multiple layers of security and protection. We've got an overcapitalization. Then we will also have the all risk surety insurance wrapping, coupled with very regular, monthly at least, attestation, transparency reports, and audits. Where we're working with, big auditors to work out exactly how that's going to work. Now we've got one attestation out there. We're going to release a couple of more attestations as well, like just during this soft launch phase, because everything's been pretty rushed, to be honest. So we recognize that things are not like perfect at the moment as far as from the transparency side. But we're working on all of that, and that's why there's like the iterative approach of soft launch and an official launch. We just didn't want Pro to be held up by the USD1 launch, and so we just got it out there, right? So to a certain extent, our community is sort of getting the foot in the door first, where we won't start screaming from rooftops and getting out through PR channels and the financial press and interviews and all this kind of thing until the official launch, because that is when it's going to be rock solid and highly resilient. So, and just on like the insurance, and that's what will make it highly resilient. Anyone sort of following the space has seen a lot of rocks and holes poked in, say, Tether and Circle, and they poke holes in the attestation letters. They say, oh, this is non-transparent and stuff like that. And there is some like custodians need to be careful, because if they go and say, okay, well, here's our bank confirmation letter or RWA, like ready, willing, able letter or whatever, from a certain bank showing, okay, like bank balances or whatever it may be, or accounts holding certain assets, then like there's vigilantes out there that will go and attack like the banks, or there's stakeholders of banks that might not be happy, and so the banks are really, really cautious about it. So the banks are not comfortable in just being publicly exposed. That's what I'll put. So there needs to be a layer of independent verification that also might protect banks involved. So there is that side of it. But what the all risk surety insurance does is, you can poke holes in attestations, but in this case, you poke hole in basically a syndicate of A+ rated financial institutions that are guaranteeing through what's called all risk surety, which is basically the covering of all risks, right? That's where it gets its name from. The asset reserve. So in practical application, I think it's actually a pretty good deal for the actual insurance company, because they get to see in real time and at all time, like transparently displayed to them, and they're under confidentiality, the asset reserves. So they see the value of the asset reserves, and they obviously can see the blockchain coins in circulation, and they insure upon it. Now, like when it's insurance this kind of insurance doesn't operate. It's like, oh, I'm just going to insure it. No, it's like real heavy lifting work. There's captive funds involved. There's the mechanics of it all, and how it actually works requires a lot of heavy lifting. And this is the first time it's been done in the space. It's patented as well.
What does that mean exactly?
So the insurance process, which that is being implemented here, it's a patented process, and it's highly unique. It's a patented process. That's what I'll say, and so it's like we are protected in what we're actually offering as being highly unique here. As we come out and we offer it to USD1, our stable coins. It'll be applied against KAU and KAG. It'll be applied against new products coming in the real world asset space. We've got our wholesale gold digital currency coming. We've got our multi-asset backed digital currency coming. Now, this will apply to it all. Now, that's at the product level. Now, what I can also advise is this will also be applicable at the exchange wallet level. Now, what you end up is this wrapped holistic solution of the product values being backed and the products facing like within the wallet system that we provide being backed as well through all risk surety, and providing basically the safest of the safe kind of custodial facility out there. Like it's and we'll be a leader in the space. I'm sure that we'll have other stable coins knocking for such a solution because it's a really big value add. Like I've seen all the stones. Yeah, I've seen all the stones thrown at Tether over the years, and still that they're the market leader, but it's not that difficult to integrate with other exchanges. Let me put it that way. Like we've got contractor firms all lined up that act to assist with listing in different firms, and some of these have listed projects on 100 different exchanges around the world, and major tokens out there, and they've acted as a supporting partner. So we're building out our own team internally to support basically the what I call the externalization of the stable coins. So and our suite of, we'll have wholesale and multi-asset backed digital currencies. Our own internal team, their job will be sort of externalizing them. So pushing them up against different exchanges, different platforms. Yeah, go ahead.
I want to focus on a couple of things that you said, that you launched USD1 with $15 billion in assets. That puts you, or the USD1, at the third largest stablecoin in the world. It also puts it as the 15th largest cryptocurrency in the world and the only cryptocurrency that's backed by insurance. And with that said, with the exclusivity, Tether can't come and do the same thing, or USD1, or DAI, right? Only you guys, with this new information that's exclusive, have this guarantee.
Yeah, correct. So let me just clarify that the insurance at this point in time during what we're terming the soft launch, it's not in place at this point in time. But come official launch, actually, it will likely be before official launch that it'll be in place. We wanted to get it out. That's why it's not perfect at this point. When I say not perfect from the insurance perspective, the insurance isn't there, right? The asset is there, and it's like the safest of the safe asset. It's literally a cash asset, like cash in bank, blocked in favor of USD1 and Kinesis Global Proprietary Limited Australia. So it's not like what Tether does. What we've done there, it's a cash asset blocked in favor of. So highly secure asset, and it's exciting. But it's the start of a project. So don't look at this as a standalone thing. It is just the start of a strategy and a project. So to answer, Reno's question as, what does it mean for KMS users? What does it mean for KVT holders? What does it mean for yields? What it means is this, from an on-ramping and off-ramping perspective, we can integrate this into, hundreds or thousands of platforms and exchanges all around the world, right? That's the first thing. So we become less dependent on actual banking because we establish rails of capital. I've always said, for Kinesis to be successful, first we have to bring the capital into the system. Next thing, we need to get it into motion. So it's the highway of capital in, right? So that's the main thing. that's one big thing that it provides. The stable coins are going to play a really big role with Kinesis Pay, because it allows us to go out and, we want our community activated and mobilized on the referral and partnership side to actually bring in merchants, like pound the pavement, sign up merchants, get the KPay logo on the countertop, get businesses actually using it. And it is, you guys have probably seen from the work that you guys do, and the good fight that you guys are fighting, it is a heavier lift when in the first instance you have to sell people on the benefits of gold as sound money, right? Now, some people get it. Some people, it's like, preaching to the converted. They get it. Others are like, oh, why would I do that? And, how do I do my tax reporting and accounting? And brain explode. It's too hard basket, right? Whereas what this does is you can just say, hey, this is a new system that is actually going to bring massive efficiency, get paid immediately. There's going to be cost benefits. You don't have to pay, big merchant fees with card processors and the like, credit card processors. And, it's settled immediately in your account. And it's, you can do it for your, local legal tender currency. It can fit in with your accounting and tax systems that you pay tax in. It's all that. And then subtly and softly, we're able to educate and sell on the benefits of sound money, right? Within the Kinesis system, you log in right there, gold, silver, yields are there, yield ticker counting away. Hey, it's only if you use actually gold and silver as, currency. But so the way that obviously the stablecoins work is that they're on the native public blockchains, Stellar, ERC20. So you're enjoying that cost-effective, efficient rail system there. We really like Stellar. It's fast, efficient, cost-effective. But there's ERC20, which, they've got the universal integrations beyond any other blockchain, I believe. Maybe, Bitcoin maybe, but for what we're using it for, it's got the universal integrations. So they're the two that we're going out with initially, but we're agnostic. We'll expand blockchains. We'll look at all the interoperability opportunities available to us that are already coming in, hard and fast. So it's exciting. There's that. There's I think there's 13 stablecoins that we'll be looking to roll out by hard launch. That'll be integrated into what we call the hybrid account system, where the fiat currencies will convert to our stablecoins. There'll be an opt-in or opt-out process that we go through with our users to educate all of that. They have to be comfortable with that process. But there's also other products coming as well in the real world asset space, which we see to be major there.
Okay. Just two quick follow-ups before I forget. With the Kinesis Pay, you mentioned with the work that we're doing, we've engaged with the National Federation of Independent Businesses here in the state of Florida. They kicked up the Kinesis Pay system because we told them that by accepting gold and silver, they'd only pay between 22 and 44 basis points, which was huge for them because they would be saving between 300% to 400% on credit card exchange rates. When they heard this, they kicked it up from the Florida branch to the national. The national organization sent out a ballot initiative to all the businesses that are part of the NFIB on whether or not they make this a top priority. We met with the executive director and chairman here in Florida, and they said that the data is already coming back and it looks positive, and they're pretty sure they're going to be lobbying to make gold and silver legal tender because of this specific issue. Cutting credit card fees down is one of their top issues. So that is very exciting. And then what was the second follow-up? I'm trying to remember.
Yeah, I think people want to know if their crypto's safe. It's basically that question.
Oh, I remember my question. Specifically on the USD1 outside of the KMS, is there anything going to be put into the yields?
Yeah, so with regards to that, that's not something that we've really factored in. I mean, as we get more powerful, I believe there's the ability to negotiate perhaps with some of these exchanges for some kind of rev share model, but probably not, right? Like, even if we can just list with these different exchanges for free, because normally they charge actually, a lot of money to actually get onto the exchanges. I think, that we should be able to integrate efficiently, efficiently with these different exchanges. And now that we've got the public blockchains and not a proprietary wallet system that the other exchanges need to integrate into their system, so it's more of a matter of turning on these products rather than having to go through like a heavy lift integration, then it allows us to externalize our products much easier. So the big benefit is actually, spreading awareness of both our products and Kinesis as a solution provider, right? So, benefits of all risk surety on the product level, but also at the exchange wallet level as well. And that link there will be, something that we can really hammer home. I think it's an effective strategy.
So Tom, what you're saying is, as far as people's crypto on the KMS, let's say, that are not gold and silver, that this all surety will be sort of an insurance for them as far as potential hacks or risks or any of that kind of stuff.
Yeah, correct. Yeah.
And is that something that will come later on, or is it something that would come when the stablecoins hard launch happens?
We'll do our best, but the sequence is that the first policy gets implemented on the actual stablecoin, and then comes the wallet system.
And with to just follow up on Daniel's question about the yield system, if, for instance, somebody used USD1 with the debit card, would there be a liquidation fee there to liquidate into USD to pay for the goods? No. Okay. So there wouldn't be any yield from like with KU or BTC.
Yeah, so with what we're doing with the hybrid accounts, where basically the USD account is the USD1 account, then there will be no conversion fee. You'll see basically the pair USD to USD1 fall out of the Kinesis system over time.
Okay, thanks.
If Andy wants to say something just to the community from his perspective on the progress, that may be, a good thing.
Well, thanks for that. And do you know what? Today, the 204th episode of Live from the Vault comes out. What a team! I tell you, this is a team effort, and we've got nothing but the best guys here, and girls, and basically. This has been a journey, and you talked about a minute ago about education. This is about education. This is about bringing information to people that they may not know, so people can make better decisions. It's all about, ultimately, I always think this is the ability to take responsibility for yourself, and obviously gold and silver are the two things that come to mind all the time. Well, what do I do today? What do I do today then? There's all this stuff that potentially may happen. So anyway, this 204th episode, I'm wearing my Christmas jumper here because, it's Christmas, and I shed my Kinesis shirt for this. You know what? It is been a buzz. And I can't, I'm thinking about this journey, and I'm not going to take too much time to say it, but look, I met Tom in 2010, and it was a radical time when there was such an imbalance. I was involved with the regulators, trying to level the playing field, what was a huge imbalance. And I met Tom just as he was starting the allocated bullion exchange. And to be honest, this was the leveler that brought an institutional grade solution to really what what the COMEX was not doing, and that journey then led into Kinesis, and without Tom creating this allocated bullion exchange and aggregating a physical price around the world that can be brought down to a milligram. Obviously, you couldn't create a currency, and so Kinesis was evolved. And today, I look at this journey and all the milestones and the headwinds. Look, good God, this industry, our industries, all of our collective industries have been facing massive headwinds, and we have solved every one of them. And today is a buzz. I mean, it's midnight my time, and I'm buzzing. Why? Because we've just launched a game changer, or Kinesis collectively, a game changer here. And this is the launch. I mean, to Kinesis Pro in sort of combination with USD1. I mean, this soft launch is a game changer. And I think it's hard sometimes to even sleep because the light bulb comes on. You realize the potential of this is beyond imagination for most people. And so I just want to thank everybody, yourselves, guys, for all the good work you do. We're all one team here. We're all on the same side of the table. All our clients are on the same side of the table. They're not clients. All our partners are on the same side of the table. So this is, to me, a buzz. Thank you, guys, for all you do. I just wanted to say to our entire community, we're here behind you. Hang on tight, because this is going to be quite the journey.
Awesome. Thanks for that, Andy. Okay, so the next question here relates to the virtual card that is imminent, supposed to be launching here in the new year. Can you talk a little bit more about the fees, the yield itself, how you're able to procure the yield, and also then once you're done with that, speak to any new regions that you see coming online after these initial ones?
Yes, thank you, Reno. So let me just first say, I think that the virtual card coming is a very exciting program. So yeah, that's in total like 3% metal back, 1% goes into the master fee pool. That's contributed by us, and 2% goes directly to the user or the consumer. So now, as far as where the yields actually come from, the bottom line is they come from us. How do they come from us? They actually are redirected profits from the physical mint and from our physical trading operations. If you were to take the virtual card program in a silo, it would be a loss-generating business, because we actually get charged fees, right? We're absorbing those fees, and in addition to that, we're providing like metal back to our users. So that's coming from us. And this is our way of giving back the profits that are generated at the mint in an intelligent way that stimulates activity within the system, and also allows us to position ourselves strategically in a target market vertical that will attract in basically the normies, like the mass market from around the world, to use the system. So it allows us to, put ourselves, like, say, in different award type, not competitions, but, award reviews with other, cashback debit card programs or credit card programs around the world, to compete with them, to, get that kind of exposure, which we will, to be able to promote and market with that positioning, with that messaging, right, to bring in normal people who might not care about gold or silver at all, but they care about, like, cashback. That's what they care about. So it opens a new, broader audience, broader target market to us, and it's not just sort of, paying out money. This is like this is a gift that we can give to our community that will keep on giving, I believe, because it allows us to position and actually onboard customers and to bring in like velocity of spending within the system that will generate more yields that will give back more to them. So, it's one of these sort of, spiraling, self-fulfilling prophecies that we see it as strategic. So the profits that are generated at the mint and through our physical trading operations, and we got physical trading operations, like bringing like gold out of Africa, and at a discount, like literal boots on the ground operations, and at a discount and selling it into the mint or into other markets. So redirecting those profits. Now, an accountant or an auditor might say, "Oh, that's quite ridiculous to be operating a business unit at a loss." But the way that we're able to justify it as prudent executives is by saying, well, really what it is it's a redirection of profits from another area of our business and into basically it's sort of capitalizing it. We're calling it like a marketing expense to a certain extent, like using it as a marketing expense to commercialize another area of our business. So that's how we're able to do it. If you take the business by itself, it's going to be losing money. If you take it with, the holistic picture of everything that we're doing, then it provides incentive to our users, it gives back to our users, but also allows us to commercialize easier. It provides value.
Yeah, it's brilliant.
Now, what we will look to see from this is also a decreasing of cost per acquisition of customers. So yes, we redirect profits. Yes, it gives back to the community. Yes, it assists with brand positioning and new target markets and broadening our audience. But we want this to be a product that we can really get behind. We've already got some really intelligent marketing behind this to bring down cost per acquisition. So it actually becomes a lucrative exercise for us in doing this. Yeah.
Just a quick question. Can you touch quickly on the fact that USD1 isn't tied to any of the original digital assets in the KMS?
Yeah, sure. I'll explain that. Yeah, no worries. I did actually touch on it earlier. So, the reason why it's not is because what is coming in Q1 is the hybrid accounts, right? So everywhere you see USD will be USD1. So in with the existing pairs where you got USD, that will actually convert to USD1. So that's the reason why. So there's no point in having this sort of interim period where you've got double up sort of USD and USD1 pairs when it's all just going to get converted anyway in Q1 next year.
Oh, that makes sense.
So that's
perfect.
That's the reason why. So that's why it's sort of like a soft launch, and that's the reason why.
All right. So, big news about Rob being the head of the U.S. markets. One of the things that a lot of people are asking is, when can we expect to see other on-ramps onto the KMS and Pro?
Yeah, we recognize that it is a big topic, the on and off ramps. It's going to be a major focus going into the new year. We're working with what we call, well, not what we call, what is called open banking platforms to basically provide like bank accounts to our users. We're waiting on actual final approval for a US partner, and once that comes through, then we'll actually be able to actually start providing bank accounts to our users within the United States. To get paid by actual third parties into those accounts or pay out to third parties. There's normally an interim step where like payments have to come and go from the client before they turn on the third party payments, just to test it through. So I do expect that. Like that's what we've got in Europe as well through our partner in Europe. The space is still it's still, I think, recovering after such a major shock from, the regulatory and government, I guess, beatdown on the industry. There was, we've been talking about Operation Choke Point 2.0 for a while. And obviously there's the Joe Rogan interview recently that's sort of, doing a bit of an expose on it. But it's real. And the banking space is something challenging. We've had, what I'm talking about now is just one pathway. We've got many pathways which I wish I could talk about, but we can't. What I'd say is that what it translates into is vertical integration and our strategy with vertical integration. So, yeah, we're vertically integrating in the banking space as well.
Okay, so the last one is we've got the holdings export, and you can identify the amount of each asset held on a specific date, which is great. But one of the things that a few people have mentioned is that they're looking to see where the high watermark rate is across a number of dates. And I think this is perhaps more on the US side, but it's something that a number of people have mentioned. So what would be nice to include is the functionality to show a chart of the account value over time expressed in a particular currency. I mean, US dollar is probably the default one, but I think a number of people would find that sort of functionality useful.
Are you talking about your portfolio, your whole portfolio? Yeah,
Yes.
This is something that we have scoped, actually. We also brought this in quite some time ago. It's a little bit more complicated than it would appear, but it is anticipated. So it is in a backlog. It is something that has been scoped, and we just got to get it into play, basically.
Okay, that's great to hear.
I mean, like, honestly, guys, if we could open the lid on a lot of the stuff, we're probably, like Tom was mentioning before, a lot of the tech's come in-house now. We can get a lot of velocity to everything, but there is a hell of a lot of development and product design that is due out this year. I think in the first 2 quarters of 2025, I think people are going to get a shock. They are very used to things moving a little bit slower, but I think things will move a hell of a lot quicker, and it'll make people's heads spin. We have a lot in the pipeline, and now a bulk of the work is out of the way. We can start to attack a lot of the stuff that's been lingering for some time. So I think there'll be a lot to uncover and unpack in the next couple of Vaultsides for sure, especially when it relates to the product and the little nitpicky things that people are struggling with. A lot of that will get cleaned up.
One thing with the reporting, and this is obviously a complication, is that the base currency is relevant. So we're obviously going out globally. We've got a number of different fiat currencies in the system. Okay, those fiat currencies will soon go to the stablecoins and operate that way. But for all intents and purposes, there'll be no real change apart from added functionality. But the reporting, you really need to choose like a base currency. And we're not tax specialists, so we're not going to offer the tax reporting. We're going to provide base level reporting, but it all needs to be in relative terms to a natural base currency. So we've looked at reporting modules at different points in time. They get complicated with differing base currencies. So it's definitely there. It's definitely there, but as far as from a tax perspective, what we currently do is like minimal viable, I would say, from a tax perspective. But yeah, like there will be reporting functionality that will be built out, but it's actually quite a large project. We've scoped it. It's a huge project. So we're getting there. It'll come, but yeah, It'll come. 2025 thing.
That's good to hear because it makes it much more relatable for someone in the UK or in Australia.
So yeah, and just to dovetail into what Jai was saying as well before on the development side, I just have to echo and reinstate that, because where we've found delays, it's like the most frustrating internal experience ever that actually affects our internal morale sometimes, because we'll work night and day in towards these different projects, and the development teams are really flogging away at these different projects, and we get stalled and we get held back by third parties. And it's an incredibly frustrating exercise. So we see enormous sort of time, energy, and resources going to these different projects, and they're mainly out of the banking space, right? So, like, to give you an example, like these integrations are big integrations. They're not small; they're huge. With like the debit card providers in particular. So initially there was banks, right? Well, actually initially there was Unified Signal, and actually that program was okay. Then, what happened there was like the first sort of round of, I don't know whether, we want to provide services to the digital asset space, and you just get turned off. You're like, okay, well, so much for all that development work that we put into that. And then we get sort of left holding the bag. And so then we tried to be prepared with a party that was specializing in the space, banks. But then, one of their upstream providers, their upstream providers just turn off the program. And it's all without any notice. So then we're back to, square one again. Banks represent, we've got someone coming very soon. But, you have to engage in a whole new integration. So we go and we do this whole new integration, and that's fine. We bang into the Christmas period where both Visa and MasterCard do what they call code freezes or freezes that start around mid-November. And banks, I don't want to, say anything bad about them, but we were not made aware of any of this. And so we had, in our view, and banks were continually working towards it, was actually a 10 December delivery period. And so we had everything lined up to deliver the virtual card on 10 December. And then, the development team working in banks didn't even know about this. We start to find out through top-level executives at banks who had been dodging our calls that this is what had happened. So anyway, this is the VDC is a Q1 project. We want to get it, launched and live as fast as possible. But these like holdups and delays that come from us banging up against third parties and these integrations, we're like pretty much sick and tired of them, just as I guess our community is as well. Another example, which is really devastating towards our team, was we put in a multi-year effort and development, which took a lot of maneuvering from a corporate structural perspective, a legal and compliance perspective, and then from a development perspective, was the initial Qantas program. And this Qantas program, Qantas got acquired by Solaris. It was like quite a large acquisition of over $200 million. And, just at the 11th hour, we'd done everything. All compliance teams are happy. They'd thrown us, they threw everything at us that they could possibly throw at us. Then, basically, we receive a letter saying that they're, ceasing the program, and they're, exiting the contract because of they tried to, find a certain provision within the contract to be able to exit. What actually happened was Solaris closed down the entire Qantas program because Qantas provided services to the digital asset space. And obviously the board or whomever just deemed it to not be an appropriate space to be in anymore and turned it off. Now, the amount of money that we invested in that project is eye-watering. The amount of time that we invested in that project is eye-watering. And I wish we knew about it, but we don't have crystal balls where we can just see the future like that and understand that all these things will be happening. And all we can do to serve the interests of our stakeholders is to continue to fight, continue to, navigate these treacherous waters. Yes, there's easier ways to make money, guys. Like, there just is. Like, we could be, setting up businesses in the gambling space, or the forex trading space, like with leverage, with people like losing their money here and there. But that's not what we want to be doing. We're very committed, just like you guys are, to the sound money vision and the benefits that it brings to planet Earth, and to humanity. I personally see it as service towards God by serving our fellow humans and our fellow peers. That's service to God. And so this is a big part of everything that we do. Yes, we can brush aside, someone might brush aside our high level vision to just point at different things. But at the end of the day, we have our high level vision that we will always adhere to and always, follow towards. So we've gone through a lot of challenges. To say it's been easy is not a correct statement. It's been tough as hell. And we've done our best, but we've learned a lot of lessons along the way. We've learned one lesson is that the best thing to do is to actually just do it ourselves. So vertical integration is where we're going. And so we're really looking forward to actually just biting into like development work that is all within our control. So Kinesis Pay and developing like solutions that we can take directly to businesses and merchants, right? There's no, third-party integrations involved. There's just, we build it all ourselves and, go forth and run free and develop as fast as possible and, type as fast as possible to the developers, right? They don't have to get held up with it's third-party interaction. And then you bring into the picture like 24-hour time cycle. And, you get to, like, the development teams will get something done and then they'll shoot off. Okay, so, or encounter some kind of problem, and it can take 24, 48 hours to get a response back from, a different team in a different part of the world. So what it means is that it slows down the project in that way. If we do things ourselves, you'll start to see development velocity happening at lightning speed, like what Jai was saying. So as you see now, like as we go into, first iteration of Kinesis Pro, you'll see things like come online in no time. New order types, new products, the whole user experience will be enhanced, right? There's like, if you guys see what's behind the scenes on the like the user experience side, like it'll blow your socks off. Kinesis Pay, everything that we're doing there, all these things that we can build out. There'll be a whole merchant directory, and there'll be incentives for people to go and sign up their local businesses and get in there, and they can do little campaigns with basically cashback sales and all this kind of stuff. It's going to be a highly interactive, highly engaging, energized mecca and experience utilizing the KMS.
It sounds like Kinesis got brand new wind put into the sails, because the excitement, even in just this Vaultside chat, there's just so much more energy and excitement, because it feels like this internal integration is just giving you guys so much more to work with and shoot forward with. So I'm going to ask last question on this entire sheet. Where do you see Kinesis at the end of 2025?
Okay, good question. Look, we're very focused on delivery. So we've got our pipeline, the things that I've spoken to you about with delivery. There's so much ancillary that's just not even worthwhile bringing into the picture. But there's a lot ancillary that is focused on those target markets that I've communicated, and commercial pathways there. We've gone through, for all intents and purposes, a merger with a US partner. They're big in the political space, and are working channels there. and in the financial space. So you'll see like new and innovative things, solutions come up, and some really cool partnerships that I can't wait to disclose when they come about. We need to get these, baseline things actually delivered, and then we can do that. So look, we will mean something different to everyone. I think like we are wearing a lot of hats, and look, I just want a highly energetic, vibrant system that has velocity going through it, that is paying out good yields in all different directions. I think once the yields kick in a material way, the yields will be actually truly operating as intended, right? Because they're actually highly incentivizing yields. And so therefore we'll see a true use case of the yield system coming into play, and how that actually influences Gresham's law. And well, it's still my conviction that's stronger than ever that yield system will defeat Gresham's law. Like if we take out the friction on ramping, off ramping, friction in actually using the system, the system provides value and incentive. You'll see the full system humming and in play, and then it just becomes like it could just expand on its own weight, like the snowball that just keeps on rolling, but we'll be pushing in a lot of different directions and integrations and vertical integration and a big promotional and commercialization campaigns. We want to be competing with the leaders in the respective spaces that we're facing. So yeah, that I think that sort of sums it up.
I think the big difference, Daniel, to what you were saying is like this is a critical mass moment. It's the way I look at it. And from here on, future episodes is not going to be talking about what's gone wrong and explaining it. It's going to be more like, hey, here's the next nugget for you. Can't wait to share it with you. And so it's a downhill sell versus rolling the ball uphill. So I'm excited. I think this is a pivotal day and a pivotal moment. So I'm gonna wrap it up, and then you guys go get some sleep. Well, Tom, I guess you need to start your day, but okay. So, folks, just want to thank the Kinesis team for joining us, Daniel and Yuchiki, and it's just been a very productive episode with a wonderful amount of sharing. Please look for this episode in the next few days on the Kinesis YouTube channel, as well as C4SM's YouTube channel. Please continue to join our programs through C4SM, our Pioneer membership. It's $25 annually. We would love to get as many people to join that. That money goes to wonderful causes that we're fighting for in Sound Money. And in addition to that, please join the forum, the Kinesis Forum. It is a wonderful place for information, for submitting questions for this particular show. People really do share a variety of different things on there. It's great to learn about Kinesis and their community. And then finally, we plan on a next Vaultside in March. So hopefully we can stick to our 3-month schedule. And we look forward to seeing all of you then.